Brad, the stock is having a nice day, though, up about 1% in a bit of a shaky market. What do you think is giving bulls some energy this morning?
Yeah, hi, Oliver. Yeah, I thought the earnings report was all good. Like a lot of companies, they're talking this morning about how things are starting to normalize, especially on the consumer side of the business. And the pharmaceutical side, I thought, was also strong. They have a cancer medicine for multiple myeloma called Darzalex that they're partnered with a NASDAQ company called Genmab on that has some very strong sales that look good. But what I think everyone's focused on this week, of course, is what's going on with the vaccine. There's actually a meeting of the European regulators that's going on later on today, and so we might hear more about that as soon as today. And then Tony Fauci has been saying how he expects the JNJ to be back on the U.S. market in limited form, maybe by the end of this week. I think that probably means something like it may be available for people over the age of 50, which is a group that we've seen less of the blood clotting issue in. But really, I don't think that this is going to play a big role in the United States because we've got so much of the mRNA vaccines out there. The big question is, what role is this vaccine going to play throughout the rest of the world? And that's still an open question.
Brad, to see the top line sales up 8% from a year ago, and then some of their bigger drugs missing some of the expectations. I mean, one of their biggest, Stelara, did show a climb on a year-over-year basis. So clearly they have plenty going on here besides what's happening on the vaccine front. But if we do see it take a second or third seat to Pfizer and Moderna in the global outlay of these vaccines, what has been priced into the stock? I mean, it hasn't been a big mover on the vaccines already. It hasn't been like a Moderna. So is the market kind of moving past this to some degree and thinking about Johnson & Johnson's bread and butter?
Yeah, well, one thing to remember, all along, Johnson & Johnson has said that they don't plan on profiting from the vaccine, at least during the pandemic phase of COVID. And so it was never really a big revenue or earnings generator. And so you really do have to focus on their primary business. And especially on the consumer side, that's looking very strong. You know, I think one wake-up call for all of us through COVID has been how important healthcare is. And you really saw that on the consumer and over-the-counter side of their business. Johnson & Johnson is the largest healthcare company in the entire world. And so I think if we all start focusing on our health a little more going forward after everything we've been through the last year, there's no better company to really benefit from that given their scale and global reach.
Brad, stick with us because we're going to talk some broad sector stuff in a sec, but we're going to trade JNJ here. Tom, come in here and let's look at this from an options perspective. With a little bit of a bounce this morning, to Brad's point, maybe the stock is kind of refocusing in the mind of investors what's going to be important to it going forward. How'd you get bullish on this right now?
Well, just slightly bullish here, Oliver, and probably to Brad's point, if there's some noise here over the next little bit with regulatory issues and maybe some, if you look at this on a J&J, maybe the vaccine doesn't get approved or maybe it's used less. How do you play this? Well, implied volatility is down sharply post-earnings. So I looked at a call calendar to the upside, but just slightly to the upside, using that 165 strike where I buy the June 165 calls, 59 days till expiration, and then against it, because there's still some option premium in the near-term stuff, selling the May 7th weekly 165 calls against that. And this is a bullish call vertical, slightly bullish call vertical. And you can see from the risk profile here, if I pay roughly about $1.50 debit for that, that's my entire risk on the trade. And you can see the break evens there near about 160 on the downside and all the way up to 170 on the upside. So you've got a nice wide range for this thing to trade in over the next 2 months. And you're taking advantage of that lower implied volatility because the event risk is out of this stock. And you get that ability to roll that short option that you sold in the March 7th weekly series over and over again until June expiration. And those rolls can expand to about $1 credit on each as you get closer to expiration for that short option. So this might be the way to play it, where you have a range and you can probably withstand some noise here. And if implied volatility does rise, that also increases the price of this type of strategy. So this might be the way to play it if you think it's more neutral to slightly bullish on JNJ over the next 2 months.
Okay. All right. So looking for a range and with a little bit of bias to the upside. All right, Tom, you got another trade for us here in a sec. But Brad, first, a little bit of a victory lap. I'm looking at my tweet from January 13th when you were here on the show, saying that some of the biotech companies, specifically those in the gene and genomic space, were due for a pullback. I mean, basically, that was like the high for CRSP, close to it for Edit and some of the others. Has there been enough pullback that you were looking for?
I do think the sector is starting to get interesting. The XBI, which is the ETF that we follow most closely as our benchmark, is down 26% from its February high. You know, that's a pretty significant pullback. And I think that some of those genomics names that you mentioned have always been overvalued. I think that people are too rosy about how quickly their treatments will make it to the market. But I think a lot of good companies have been dragged down with everything. And so if you're nimble and doing, you know, your own research on individual names, I think there are some attractive things out there that you can start nibbling on. But yeah, the sector was just too hot coming into this year with all of, you know, COVID being in the headlines and everything. People were just throwing money at the healthcare sector and genomics especially, and it just wasn't based in reality. And so we were due for a pullback, and we've seen it. There's been a couple of headlines that have also scared people a little bit. The FTC has said they're going to consider pushing back stronger on pharmaceutical mergers, and you know, drug pricing is always an issue. So we have to follow those closely. Yeah, I think we're starting to get to a normalized level that, you know, putting more money to work might be interesting.